Hey guys, hello, this is Nico. I'm the founder of Pantarai and I'm here to do a video showing you our Pantarai software, a forward-chaining open AI expert system which we have coded to interpret and understand financial markets every day. Pantarai is a fintech company that has the mission to help different types of investors experiencing a simpler and smoother investing experience. And what we use is our intelligent system to interpret and understand markets to then make asset allocation decisions every day to adapt the investment portfolio that we have to shifting market conditions. So we not only invest and implement the system choices in an investment strategy that is called Pantarai ADAPT, which is listed on the stock exchanges of London on the LSE and Amsterdam Euronext. The ticker is ADPT. You can find it online. It's published and it is live every day. Real markets, approved and regulated for retail and institutional investors. But also we supervise the choices of the software via a front-end system that I, Nico, have coded in the past years together with the development on the engine. And now we can access these AI system from the inside, which is full of interesting information. So the video today is to show you what we see inside our software and how it makes investment decisions. I will bring you on a different screen and we'll navigate the software together. Very soon I will publish the access to this software. There will be a subscription and we hope to inspire either savvy home-based investors buying and selling ETFs to look at our daily list of favorite asset classes and ETFs to buy to inspire your investment choices. This is not financial advice. You will invest with your own judgment. This will only be an additional tool for you to make a decision. Or if you are passionate about tactical allocation and moving your portfolio around over a period from 1 to 3 years, instead of only having to buy and waiting patiently for 5 or 10 years, which is what is typically suggested, well, you can then invest eventually with the listed ETP that we have on the stock exchanges where we do this work inside the portfolio. Again, if you will decide with your own judgment that this is the product that is good for you. So I'll bring you on the screen and we'll look at the software together. We'll see here the starting point, which is the end of the reasoning of the system, which is our current investment portfolio. You see that we are recording on the morning of the 6th of February 2026, and this is our investment exposure or portfolio to close of business yesterday, the 5th of February. So in this screen, which will be available on a daily basis just to follow what we do in our investment strategy, you see on the top left the overall asset allocation of our portfolio, which is split across the main asset classes, which are stocks, bonds, and commodities. I will explain now that we only invest in stock indices via liquid, well-known, long-only ETFs. What you see as bond and cash is a sum of European and US government bonds only, and the cash proxies, including floating rate notes, in case you are an expert, I will explain later, and the commodities, we have either gold or a full basket of commodities. All of these positions are expressed via individual, hyperliquid, very famous, long only, no leverage ETFs, okay? So the overall portfolio mix is evident on the top left. The currency exposure, we manage the euro-dollar exposure. We are European investors and we are looking at what European investors can do. And so we decided to be fully hedged in euros or to open some positions to the dollar. The top right is the current split in terms of which currency we hedge with the basket of ETFs that we buy. And then we go into the detail where you can see in the bottom left today or yesterday at close of business, which are the individual main equity indices that we buy. That can be the S&P, the Nasdaq, or the Euro Stoxx 50, the sectors or the factors in equities that we also like and buy. It goes from quality to defensives to low volatility. The markets are a bit volatile in these days, and so you will understand why we have defensive positioning. If you go into Europe, we also have the possibility to expand in specific regions which are underweight the Euro Stoxx 50. And finally, we have the opportunity to buy international stock indices, Japan, MSCI emerging markets, or also a world value index. Today you only see Japan there. On the bottom right, you see the other contribution in the portfolio, detailed into which type of government bonds we buy, European or US Treasuries, which type of duration or maturity. This is 1 to 3 years. If you are not an expert investor, you will not eventually know that when you buy government bonds with short maturity, you buy contracts where you expect a coupon to be paid to you with very little market volatility in the bond prices. This means that these bonds will not move very much unless there will be a cut or a hike in the local interest rates. If you get exposure to government bonds with longer duration or maturity, imagine 7 to 10 years, you are more exposed to changes in interest rates. Those will be instruments which will be useful in case of changing macroeconomic context. So if the economy or markets deteriorate, there will be an expectation for interest rate cuts. So longer dated European govies will do more performance than the shorter dated ones. Okay, these are the products in the portfolio there. And in the bottom right, there are the two ETFs that we buy into gold or the basket of full commodities. Okay, so this is the starting point of the software where you see the asset mix that is included every day in our investment strategy. This is also published in our website. If you Google Pantarai ADAPT by leverage shares, you will see our own page where we publish this in terms of exactly the ETFs that we buy. But here we are doing a training on the system, and so this is your starting point, is to explain what you see. How do we arrive to this strategy? So I will go with the mouse on the top right and I will click on market views. Okay, here you will find a live list left to right of the asset classes where the system believes or thinks, of course, systemizes or synthesizes, go from strong overweight to overweight, neutral, underweight, or strong underweight. Okay, so while we give you in the previous page exactly a weight out of 100% of how much we place as a view on each asset class, here you have a list of the things that, depending on which philosophy we are investing in, you will discover later with me, we look at global macro, sentiment, and momentum. The multidisciplinary approach will lead to these market views, which are valid for the day in which they are published and the day after, because today this is still the portfolio that we have until we change it, and this can be used eventually to inspire, together with additional elements and your own judgment, to make your own investment choices, okay? But where is all of this coming from? Why should we trust the software decisions? How does the software work? And here we start. I'm clicking on the right menu into cycle. If I click on the mouse and I swipe in every of these boxes that you see below in the screen, swiping on the left, it comes out the comment of the software, for now only in English, on what it sees in the cycle. Or if you are not very familiar with this concept and we swipe right, you have an explanation on why it is important to understand in which phase of the economic cycle we are in the regions we look at, the European Union and the US, with an experience or a stylistic design of the cycle, which is represented by a curve that starts bottom left in the recovery phase after a recession. There will always be in any economy of the world at some point a phase of acceleration and fast growth up to a peak. It will then go to the maturity phase where we are right now, where you see the green boxes in Europe and in the US. It will fade down towards late cycle and a slowdown and then fall into recession. This is important because we know from the past 70 to 80 years of modern market history which diversified portfolios of stocks and bonds or dollar or commodities fit and work in any moment of the cycle, more or less, but it is always very hard to recognize exactly where we are in the cycle every day. Daily market conditions will feel like early in the cycle, peaking or closer to a recession, depending on a plethora of variables moving every day. Okay, so here we form an opinion on where we are in the cycle, and in the back end, the system will start assuming which macro or cycle-driven investment portfolio will be useful for today. Okay, this is the starting point of the analysis. If we wanted to further analyze the macroeconomic picture, and if you're not an expert, don't get scared by this quantity of information, here we have a macro summary on the left-hand side for Europe, on the right for the US economy. Top is economic growth, middle of the page is inflation views, bottom is interest rate outlook, color-coded. You will find in both regions, top to bottom, every single market indicator giving to everyday investors, macroeconomists, institutional investors, or traders a sense on what is going on. So I'm not gonna teach you a macroeconomic class today here in this training. Maybe we'll do it another time, or you can research on your side if this is not familiar to you. But we have on the top a number of leading indicators for growth with an arrow that suggests not only the level that you see in the number for every indicator, but the most recent trend, if this indicator is going up or down. And the color green to yellow to red is a synthetic expression to immediately capture if such indicator is in good shape or not. If I click, we jump on a page that is exactly showing the indicator, but we'll go there later, okay? We see on the top of the screen for Europe and the US, PMI indicators, which are leading indicators of economic growth, consumer confidence, a sense of employment or unemployment. Of course, if it goes down, more people work better. But also, what is the coded market hiring expectations in Europe, for example? There's no assumptions from us here. There's no forecasting on the future. There's only real-time indicators that come from the market. And so this is all data and information available for everyone on which we can make investment decisions, okay? If we move to the right, on top of the PMIs for the US and consumer confidence, we have the famous weekly economic index, which is another proxy for understanding where growth will go in the US in the short term, employment, and different metrics to understand what is the health of the employment market, okay? If we go down to the inflation part, we not only look at the latest inflation and core inflation year-on-year numbers, but we also look at the drivers of inflation. For example, where are wages in Europe and in the US? Where are commodity prices? In this case, it's not only Europe, it's global, where you see me with my mouse. And then five-year forward, which is a complex way just to say that in the US, we have a daily metric to understand every day where the expectation of inflation in 5 years' times will be for the market, which is a very important anchor for markets to understand inflation, where it will go. Okay, so Of course, you need to be fluent as an investor to understand some of these things, but the idea is that we start from the final decision of the software, which is our portfolio. We'll make a transition towards which are the general market views per asset class today that can be used to inspire your trading decision, and then where all of this is coming from. First, where we are in the cycle. We just saw the page earlier, which is this one, and where we are in terms of macroeconomic summary. We'll click and review together all of these pages quickly very soon. I just want to add that the system not only looks at cycle and global macro, the global macro context, but also looks at two additional elements, one of which is sentiment indicators. These pages are evolving, they will improve, they will become aesthetically more professional. You see a work in progress, but this page has a legend on top that works as a color code for the page. For Europe on the left, a global indicator which is copper gold, and for the US on the right, we have selected our favorite plethora of indicators confirming if sentiment is happy, mixed, or negative in two of the biggest markets on the planet. Okay, you might be familiar with the VIX, which is better known. If we click, we see the VIX in Europe. On the right, if we click, we see the VIX in the US, which is a primary measure of tension in the stock markets. The algorithms in our system work, changing attention in a non-linear way. So macro is the core, but if sentiment indicators deteriorate up to certain levels with a certain speed, then automatically or autonomously the system will reduce the weight in risk assets protecting the portfolio. So sentiment up to a certain level is a very important metric to move the portfolio around. We have sentiment technical indicators like the RSI indices, but we also measure how cyclical sector stock performance goes versus defensive sector stock or equity performance to understand how investors feel. We look at different spread levels in the corporate bond market. If you're not familiar, investment grade is the credit quality of higher quality companies issuing corporate bonds. High yield is lower quality or smaller, spicier companies issuing corporate bonds. We look at the peripheral spread health, which is how Italian, Portuguese, Spanish bonds do versus the German bonds, for example, in Europe. And on the right, for the US, we look at exactly the same indicators, plus also the nuances of the individual rating, high yield, triple C spread changes versus the overall high yield market. Okay, on the other side we have copper gold, which is a famous indicator of sentiment looking at commodities. So you can click and review sentiment every day. You have an overall impression through these summaries. You click on every page and you see the detail. Okay, before moving on to the maps, I want to show to you that, going back, you can see exactly every day how and where we invest. If you click on market views, asset by asset, you have an idea on what we like inside the system or not. But also you look at why and which summaries have led to the single investment choices. The last part I want to show you from here is that you can exactly monitor, since we started here in September, but also looking at all of 2025, and the white line is when our active ETP was finally, issued on the stock exchanges that I mentioned, how every single index or asset class has been changing in terms of portfolio weights. These might be relevant only if you care about tracking more closely what we do on the basis of these investment decisions, and this is to show that yes, we have a tactical allocation investment strategy, and by definition, shifting market conditions as we promise to generate a reliable, consistent performance in all phases of the economic cycle, it requires for different asset classes to go up or down in the weight of our portfolio. By looking at the S&P and Nasdaq, you will see, for example, that we have a gap of stocks in between March and April of 2025. That is the Liberation Day period as defined by the Trump administration in the US, where tariffs caused concern into risk assets in the market. The performance drawdown tested in that time, it was for our portfolio minus 3%. A balanced portfolio was doing minus 11 at the bottom, and the S&P was close to minus 20. Okay, this is how we try to manage drawdown. As you click through this section, you will see the different weights of different sectors or styles in the US or in Europe. European bets in terms of the Euro stocks or other regional bets, government bonds or commodities over time is a bit of a proof on how our investment strategy works, but also how our model thinks, and transparently where we have put our bets on the basis of the work of our AI expert system. Okay, we think this is quite a big deal. What is missing is the full exploration of resources to better understand what is going on, okay? And so we click on Explore Maps, and you will see a column on the left, which is about macro drivers, and a column on the right, which is about market trends. If I want to explore more about economic growth, we just land on the pages, one of which we have seen before. On the left-hand side, you will have a menu that will bring you across the different macro sections, or if you want to jump on markets, you open the window to go into some of these asset classes that we will review pretty soon. With strategy, we go to the portfolio that we have seen before. Or you have a market menu that will let you jump in between Europe and US easily. You will have some arrows for easy navigation, a question that is proposed, for this page, and this page will provide the answers, and a number of different pages where you can click on purpose, but will follow the navigation using the arrows. Remember that you can click on the mouse, swipe on the right, bringing your page, to this yellow scrollable screen that will explain what we are looking at, why, and what do we expect to see, and the current explanation, from the software to the latest available information. In this case, this indicator has been issued on the 4th of February. And then you will have on the other page again a click that you can do, and you can, review. If we click on these arrows, we move to the section that is next. If you want, you can click on the individual parts of the software, and you will move to other charts, other explanations that will provide context, in this case, to the health of growth in Europe. You keep on clicking, and you will keep on finding elements from consumer confidence in the previous page to what is industrial production in Europe. Why do we care about industrial production? You will swipe on the right and see why do we care, and you will swipe on the left and you will see where we are and what is the implication of everything. So this is also a very good educational piece in case you want to increment your knowledge of financial markets, okay? So if I click, I can go to the next section, but not to get lost. I will click again on Explore Maps. We have done economic growth. We are now in jobs and inflation. You can continue clicking on the arrows. It's just to make you locate on where we are. Section number 2, jobs and inflations. And you will see on the menu in the left highlighted exactly where we are in this journey of discovery. European inflation in this case. You will see, and if you go on the chart, you will see dates and the year-on-year measure, in this case, of inflation and core inflation. And for comfort, we put also big on the screen, and now it is 1.9%, the latest inflation number in this case, and a quick view, which means inflation in Europe is now around the target of the central bank. Okay, we have market-driven inflation expectations by the European Central Bank. You continue clicking and you will see unemployment statistics, productivity statistics, drivers of inflation like wage growth. Remember also that you can click anywhere on the chart and you can expand these statistics to the time frame that you care about. And then we'll keep on clicking and you will continue seeing different elements that contribute to the inflation and unemployment analysis. These are key indicators. Why do we care about the cost of transportation by shipping lines in deep sea? Why do we care about the cost of air freight transportation? Because we discovered in COVID that these elements with global supply chains may add to inflation pressures. Either if you know or you don't know macroeconomics, you can appreciate that in this software we go deep into the analysis. All the data is not only available to us, is not only supervised and by humans, but is also used by our AI system to make the decisions that we started this video with an investment portfolio, okay? So also for the US, no, these are international statistics, but you can move and click in different parts and different regions will have different pages. We are here in the output gap and capacity utilization, which also have an effect on inflation as drivers, okay? Without entering too much in the nature of an indicator, you can see and appreciate that we are really giving a thorough analysis to the macro. Now we move to the next section. We can either click to the next section, but I go back for 1 second not to get lost, or we can go back to explore map and see that we are going into the monetary and fiscal policy. But we can also navigate, is an alternative, with the left menu. We coded everything really not to get lost ourselves and let the future users not getting lost, okay? So you can also navigate with this menu, going back to the beginning of the inflation phase, or we can start the monetary policy section like this, okay? There will be not only the current level of interest rates in Europe and in the US, but there will be also the market-derived daily expectations on where interest rates will go. So if you happen to work in sectors where a view on interest rates is important, this is not only for institutional investors. We have translated numerical expectations into charts which are easy to digest. On top of swapping and reading what is going on in these charts, you can also put the mouse close, and in this case for interest rates you will appreciate that the market is pricing in Europe the first hike of interest rates not earlier than September 2027. These are market expectations. Remember that these charts are dated to the 5th of February, and so this view is valid for today, 6th of February, but today during the day these expectations will change. We keep on tracking these things. This is of course also considered for the system for our investing. Where are financial conditions? Volatility in some stock markets, what is happening in terms of quantitative operations by the central banks, weekly flows supporting with QE or detracting from the market explained by the software, and what QE, how QE is impacting the bond issuance in Europe or in the US week by week to understand if the changes of the central bank might affect the prices or the supply and demand in the bond markets every week given its central bank activity. And so this is also a view that is interesting for fixed income. Okay, influence of central bank operations on the left, on equities, do they exist or not? Do we see correlations or not? On the right, on bonds. What is the extension of loans by banks in Europe to households on the left, mortgages or business lending on the right? The tighter market conditions, the less access to credit, the less stimulus to the economy. Everything is explained, remember, swiping on the other side by the system. So this is a daily good class of macroeconomics and its implications on markets, daily explained by the system, helping us make the right investment decisions, and this can be a guide for you if you are a passionate investor, okay? And then we have seen what is happening in terms of divergence in between US and Europe for current interest rates and also the government bond yields interacting with the currency, okay? This is available for you. As soon as we make this available, you can see, explore, and understand if you're not familiar with these concepts, okay? With this, we have completed the macroeconomic section that every day provides context to us for supervision, to us, supervision of the software, to us as curious investors, but also to the professionals, if you happen to be one, or to the home-based traders or ETF investors. On the right-hand side, you will see what market trends we care about. So I click and I go in other sections. You will see equities, fixed income, commodities, FX, which is for us the euro dollar, and also crypto. Our investment strategy doesn't invest in crypto, but we like to have an opinion as humans on crypto and eventually provide another point of view to our future prospects, okay? So quickly, because there's many charts here, also here you can appreciate, here is just tracking daily the performance of different main indices and what is the relative performance over different time frames explained by the system. I use the right-hand side menu to click and go through a number of insights that are useful to understand where we are in the cycle, what is happening to the market, what is the sentiment, and what is the momentum of each asset to decide if to go overweight or underweight today. Quickly, we see this chart, which it makes more sense if we expand to 1 year, looks at the style and sector performance in Europe. Crowded charts, but if you go on the chart, you can appreciate over the time frame which is the sector performing best. Okay, in Europe is utilities and financials in the specifics. Of course, you can still click on the US and adjust the chart, and you will see that in the US is comms and media, technology but not doing very well, which is this line going down, and industrials, okay? I go back to Europe, I click and I see relative factor comparison or sector comparison. Year to date, over 1 year, or over the full history that we have in the system. Cyclicals are doing better than defensives or not. US or Europe are working better. Large or small caps. On the left is value or growth, and this is explained automatically by region by the software. Why do we care about this? Because, for example, if you have a problem in the market, you will see, I go to the 1 month time frame in European markets, which are doing better than the US. You see here European stock markets, here is expressed as region, is outperforming. Well, Europe is doing better than the US in terms of Euro stocks versus the S&P. But in Europe, defensive sectors are doing better, which means, yes, people keep investing in Europe versus the US, better relative performance, but people are buying defensive sectors. The mood is not great, okay? So these views go directly in our portfolio and list of preferred ETFs or asset classes to invest in, according to our opinion, today. You also see, opening the text, what is the correlation in between news flows and geopolitics? short-term sentiment, short-dated yields, which is a proxy for interest rates, or leading indicators of growth PMIs, or company earnings, which are typically the driver of stock markets in the long term, or longer dated yields, we try to understand if there is a congruent correlation in between stocks and these different independent variables to understand what is going on in markets. What is going on with earnings, earnings per share, sentiment, relative strength index for the European indices, the Euro stocks, and different indices or sectors in the US. These are indicators which are used to understand if positions in different markets are overcrowded or there's too much fear, to eventually take a contrarian stance that sometimes is useful, to go away when people buy too much or buy when people are really scared and valuations are good. More stuff on stock markets and the currency. Forward-looking valuations, this is only for the US market. In Europe, we don't have the measure for now. And these are good algorithms which are part of what we do that look at momentum. There's a set of moving averages that we look at, and depending on how much, in this case, the Euro Stoxx 50 crosses short-dated moving averages or longer-dated moving averages, this is part of our proprietary algorithm, but without going too much into exactly the details of the dynamics as they go into our overall system, when there's a number of specific crossings and the price of an asset is showing good positive trend, we add to the overweights. If it happens the opposite, we add to the underweights, which, for example, is what is happening in the short term to the S&P. Same for the Nasdaq. Short term or longer term, it allows to take a position. Let me bring you back for 1 second to market views. You will not be surprised that the S&P and Nasdaq are strong underweight once we see a negative momentum in price, both on the short term and longer term moving averages here. Okay, so these are explanatory charts that fit with our market views that you see later. Okay, and this is just a series of episodes on how different assets are performing versus notable episodes in history. If you click here, you will see the specific episodes and how each index is doing versus those episodes. This is purely for humans, to explore with curiosity, okay? And here we have seen the equity part. If I go back to the maps, there's fixed income, but you see also in this menu on the left that we can also navigate through fixed income. There's a view on yields, okay, on both Europe and the US for key government bonds. We look at the curve. The core curve for Europe is the German Bund curve, so we look at that. We look at the yield differential, which is a good metric in the past to understand if a recession might be coming or not. The behavior of peripheral spreads, sentiment indicator, remember from before, correlations, stocks and bonds, and different drivers, possible drivers of yields. This is machine learning indicators looking at different assets, in this case the German 10 years. We don't use those in the algorithm though, because they have proven unreliable. Trend, momentum trend on the yield, as we have seen before. There's also a comparison through the episodes. There's also a full section on corporate bonds looking at exactly the same thing. If we keep on navigating, we'll go into the FX section. We'll see a momentum analysis for the euro dollar, and in general, where macro factors are going, and curiously enough, with the US dollar not doing well because of momentum and the loss of trust in the US role as global policymaker, the US dollar has lost a lot of ground versus the euro, but every macro indicator would tell you to buy the US dollar. This is just to say how we need to compare and contrast different indicators to have a good opinion, because many of these insights tend to be incongruent. I bring you for a second back to our list and you will see that there's a strong underweight on the dollar, because despite the macro analysis, which is correct, we look at different elements and we explain momentum is winning, and we have inside our algorithm the ability to focus the attention on specific elements depending on their strength. Okay? We also have an analysis on commodities, gold with the sentiment indicator, oil with some market-driven forecast on demand and supply for the next 24 months, plus momentum on oil and gold, short and long term, to invest. Finally, crypto, Bitcoin and Ethereum only. We try to look at possible drivers of Bitcoin. You see here there's a lot of text and there's a lot of views, many of which right now are not really working. So crypto is just moving on sentiment. You have the same on Ethereum, but you have also a short-term and longer-term momentum indicator to trade in crypto. And this historically has been pretty powerful. So if you happen to be a crypto investor, you can add this to your toolkit, okay? So we have explored all the maps available. The maps go into the nuances of looking at many useful macro and market indicators. Everything is introduced in terms of context. Everything is explained in terms of what is going on today, to then lead to where we started, which is the market views. And with these market views, we take a view in our portfolio using some complex calculations which are non-linear, shifting the attention of our AI expert system to this portfolio, where we do invest every day in a strategy that is called the Pantarai ADAPT, ticker ADPT, for Europe and the UK, approved and regulated by the Irish and English central bank for the two territories. But on top of adding our strategy into our own investment portfolio, we also are keen to open our intelligence to either professionals, the private bankers and sophisticated advisory, or to the savvy everyday investors from home. We would love to have feedback. Please post in comments. I thank you very much and I speak soon.